What is going on, everybody? Welcome back to the OBR YouTube channel. In this video, we are going into the top stocks to watch for the week of July 25th, also the last week of this month. This week, we have a lot coming up. To get us started, we have half of the S&P 500 reporting their earnings in this upcoming week, so there is going to be lots of volatility in the post and pre-market, and also we have our FOMC data coming out this week. So moving directly into our macroeconomic data releases for this upcoming week, we are starting the week off on Tuesday at 10 a.m. Eastern Standard Time with our consumer confidence numbers. Wednesday, 2 p.m., we have our FOMC statement and federal funds rate, and then at 2:30 we have our FOMC press conference. Thursday, we have 8:30 a.m. advanced GDP numbers, and Friday, we have core PCE index numbers coming out at 8:30 a.m. as well. So, in terms of data coming out during the market hours, we only have to worry about Tuesday and Wednesday. Tuesday at 10 a.m., again at Wednesday at 2 p.m. This FOMC statement is going to be very, very important. This is going to give us an idea if they are hiking by 75 or 100 basis points, which will give us a much clearer idea of where we are going in the short term in the market. Obviously, if they hike it by more, if the interest rates go up more than 75 basis points, there will most likely be a decline in the market, at least in the short term, potentially taking us to new lows, which we will also go over in our technicals very, very shortly. So, as you can see on screen right now, is your earnings in the S&P 500 for this upcoming week as well. Obviously, not all of them, as it is 50% of the S&P reporting this week, but here are the main names. Moving into our S&P 500 technical analysis, as of the last couple of weeks, we were watching this ABC corrective pattern playing out in terms of our bear market rally. So, as of right now, we were looking for an ABC, also referred to as a zigzag pattern, play out. This is a very classical corrective pattern that is often showcased in the Elliott Wave framework. If you are a viewer of this channel, you know that we utilize Elliott Wave very, very often. If you are not familiar, we do have videos on the channel. I highly recommend checking them out. We go very in-depth on this channel in regards to Elliott Wave theory, particularly in our bi-weekly educational calls. But for our zigzag pattern, what we were looking for was a price target of 400 to 401.5. 401.5 would fill this gap that we created back on the 9th of June, and also would be the 1.272 Fibonacci extension of Wave A. If you're not familiar with Fibonacci extensions, we also cover it on this channel, but essentially it is a technical analysis tool which allows us to forecast potential price targets. As you can see, there is the 1.272 Fibonacci extension from Wave A right here. So we are looking for price to potentially come lower. Now that we did reach 400, we did bounce exactly off of 400 on Friday morning. We are looking to see how we open on Monday. If we make another run up to test 4015 or potentially even 402, 403, that is definitely still on the cards. In the zigzag pattern, we know that there is a 5-wave move in Wave 3, meaning that we can see Wave 1, Wave 2, Wave 3, Wave 4, and Wave 5. It is absolutely possible that we already completed this 5-wave move if Wave 4 is right here, Wave 3 is right here, and Wave 5 is right here. And I apologize, I know there's a lot of things going on my chart right now. I will try to delete some of that for you guys. But the overall idea is that we are either done this corrective move and we are due to move lower as of Monday morning, or we are still in Wave 5, meaning we can expect a move, like I said, up to 401.5, 402, 403, before that high is placed, and then we will see a move to the downside. I'm hearing a lot of whispers of bad earnings coming out on some bigger names this week. We have Apple reporting. I've heard that they're not going to do too well, but of course that is just speculation. We do not know. That being said, if Apple does report bad, and some of these stocks do report bad, and we have some higher interest rates priced in, then we will most likely see the market move lower, and that will coincide with our technical analysis on SPY. Okay, moving into QQQ, a very, very similar thing. All we need on QQQ is to either have a high placed that we saw on Friday morning at 308, or we are going to make another push higher, just like on SPY. Very, very similar price action to around the 310 to 311 range. If we get above 314, 315 on QQQ, we will have to reanalyze our price targets and where we are going, because that would invalidate this corrective move on QQQ. I do not think that is likely right now, but it is worth keeping an eye on if we do have a bullish start to the week. You will notice a lot of the things that we're going to look at today will coincide with the same count on SPY. Apple has been doing exceptionally well as of the last couple of weeks. If we go to a higher time frame, you can see this. Essentially, since we hit our first price target at 129.5, we've been going straight up. We have rebounded almost our entire move to the downside. We are just merely a couple of percentage points off from our prior highs on Apple. So could we come up a little bit more? Yes, absolutely, but we are facing some significant resistance right now at the 156 level, and I think it is likely that we come lower. That being said, of course, I could be wrong, and we could absolutely move lower, but we did get a very nice daily candle close, bearish daily candle close off of that 156 resistance. So at least right now, not seeing what's happening Monday morning, it does appear that we are going to move lower. If we get above this 156 resistance, around 156.5, then again, just like on QQQ, we will have to reanalyze where we are going. But Apple has been on an exceptional bull run lately, and I think either a pullback or a continuation to the downside is imminent. We'll have to keep a very close eye. Tesla, as of this last week, posted their earnings and broke out of a multi-month consolidation. We broke to the upside, and what I'm kind of sensing now is a retest of that level that we broke, and then a potential continuation. That being said, if SPY does want to come lower, we will possibly break back down into this consolidation. It is unlikely, but it is entirely not impossible. We will have to keep an eye out on Tesla. I am primarily bullish on Tesla, differing from the overall market sentiment, just due to that breakout of multi-month consolidation. It'll surprise me if that breakout was a fake out, so as of right now, we will remain bullish. Oil is still pondering around this level, but is not yet beneath our significant support at $93. We are once again testing it, so as of right now, what we are potentially looking at is an inverse head and shoulders pattern. An inverse head and shoulders pattern is a very typical reversal pattern that a lot of price pattern traders will trade. And what we are going to need to see for that is indeed a bounce off of this level again at $93. If we bounce off of $93 and we break what we refer to as the neckline, which is just the top resistance in our inverse head and shoulders, then we will most likely continue a move to the upside and not be done with our bullish impulse wave on oil. That being said, if we do decide to invalidate this inverse head and shoulders, technically would not be invalidating because it is not validated yet. If we do decide to just break down beneath $93, $92 on the daily chart, then we will break down. We will need to see a daily candle close beneath this 92.50 mark on oil before we can confidently decide that we are going to move lower. As of right now, I would say that oil is more likely favoring the buy side, meaning it's more likely going to go higher, but we'll have to pay attention how we react to this level. If we get back above $100, we are very bullish. NVIDIA this week obviously has been performing exceptionally well and is in a 5-wave impulse move. So this is due to the semiconductor bill / the Nancy Pelosi news everybody is familiar with. So we will have to keep an eye out on our semiconductors. I think semiconductors could continue their bullish move from last week alongside with Tesla upon a little bit of a corrective move. Again, this is going to be dependent on SPY. Wherever SPY wants to go, the stocks are going to follow. So keep an eye out on NVIDIA on this completion of this 5-wave move, potentially move back up to 185, 186. But besides that, guys, that is all we are looking for in this upcoming week in terms of our very high probability setups. There is a decent setup on NEO, if you look at the 4-hour chart, that we are indeed in a descending wedge, which could play out to the upside if we break out, but we are very far away from that right now. So if we do get above $21, $21.50 on NEO, potentially look for longs. As of right now, if we don't break out of this wedge to the upside, I would say keep your hands away from NEO and Chinese equities. But there's plenty to look at in the beginning of this week, namely Apple, namely SPY, a lot of potential moves to be made. Also energy stocks. Again, we talked about this last week. If oil breaks down, we are going to go short or buy puts on Exxon. And if oil breaks up above that inverse head and shoulders, signaling we are going to have a continuation to the upside, I will be going long on Chevron, or ticker CVX. Okay, guys, that was all for me. I hope that you guys enjoyed this video and can pull something valuable out of it to take into this upcoming week. If you did, please like and subscribe, and I will see you in the next video. Happy trading.